Ever wondered about the ETF PKB, the Invesco Building and Construction ETF? Today, we'll see whether or not it's worth the squeeze, and if there's a better alternative for comparison, we'll throw in the Fidelity 500 Index ETF and the iShares US Home Construction ETF, each with its unique blend of assets, performance history, and growth potential. So let's dive into these three characters, shall we? First up, meet Invesco Building and Construction ETF, the life of the party with a compound annual growth rate of a whopping 15.6%. With its initial balance of $10,000 ballooning to a final balance of $59,785, Invesco has proven itself a force to be reckoned with. It's the sort of character that likes to live large, boasting a best year of 55.28%. And with a market correlation of 0.85, it's clear that Invesco has a knack for moving in sync with the broader market. However, just like any party animal, Invesco isn't without its flaws. It has a high standard deviation of 23.20%, hinting at a more volatile ride. Its worst year saw a drop of negative 31.10%, while its maximum drawdown stands at negative 36.95%. So, yes, Invesco knows how to party, but it also knows how to crash. Then there's Invesco's Sharpe ratio of 0.7 and Sortino ratio of 1.08. These figures suggest that, compared to some of its peers, Invesco isn't the most efficient when it comes to managing risk. And let's not forget its expense ratio. At 0.62%, it's not the cheapest date. At least it doesn't no-show you. So, if you're into skyscrapers and don't mind a bit of a roller coaster ride, Invesco might be your guy or gal. Next on the roster, we have Fidelity 500 Index ETF, the steady eddy with a compound annual growth rate of 14.06%. Let's dive into the strengths of this ETF. First off, the standard deviation is a mere 14.36%. This suggests less volatility and more consistency in returns compared to our previous contender, the Invesco Building and Construction ETF. Another feather in its cap is the Sharpe ratio. At 0.91, it shows a better risk-adjusted performance. The Sortino ratio, standing at 1.44, further solidifies this, indicating a better ability to handle downward volatility. But it's not all sunshine and rainbows. The Fidelity 500 Index ETF has a lower compound annual growth rate than the Invesco ETF, standing at 14.06%. Its best year, with a return of 32.37%, also falls short of Invesco's best. And let's not forget its worst year, a drop of 18.13%. However, the star of the show has to be the expense ratio. At a minuscule 0.015%, it's incredibly cost-effective. In the world of investing, every penny saved is a penny earned. If you're the type who likes a steady pace and keeping costs down, Fidelity 500 Index ETF might just be your match. Finally, meet iShares US Home Construction ETF, the high flyer with a compound annual growth rate of 19.81%. This ETF is like the daredevil of the investment world. It soars high and it dives deep. It's not for the faint-hearted, but for those who can stomach a little turbulence, the rewards can be quite impressive. Let's start with the good news. The iShares US Home Construction ETF has an impressive track record. In its best year, it soared to an astounding 79.35%. Just imagine that, in a single year, your investment could nearly double. It's like watching your favorite sports team winning the championship, but in this case, you're the one getting the trophy. This ETF also boasts a Sortino ratio of 1.24. This ratio measures the potential for achieving more return for a given amount of downside risk. A higher Sortino ratio indicates a less risky investment. So with the iShares US Home Construction ETF, you're getting a more efficient return on your risk. But before you jump on this roller coaster, let's talk about the downsides. This ETF has a high standard deviation of 26.61%, which means it can be quite a wild ride. And its worst year saw a drop of 30.92%. It's like experiencing a sudden power outage in the middle of a thrilling movie. The maximum drawdown was a steep 38.94%. This suggests that there could be significant drops from peak to trough during a specific record period of an investment. If you're not comfortable with this level of volatility, this ETF might not be for you. Lastly, The market correlation of iShares US Home Construction ETF is 0.77. This means it doesn't always move in sync with the broader market. So if you're looking for a perfectly predictable investment, this might not be it. If you're a fan of Home Sweet Home and don't mind some turbulence, iShares US Home Construction ETF may be your ticket. So now that you've met our 3 ETFs, it's time to make some decisions. The Invesco Building and Construction ETF, with its impressive final balance and a respectable compound annual growth rate, may be a bit of a rollercoaster ride given its high standard deviation. But if you can stomach the swings, it could be a thrilling investment. Then there's the Fidelity 500 Index ETF. It's a steady performer, with less volatility, and a higher Sharpe ratio indicating better risk-adjusted performance. However, its final balance and growth rate lag slightly behind. Finally, if you're the adventurous type, consider the iShares US Home Construction ETF. Despite its higher risk and maximum drawdown, it offers an enticing final balance and the highest growth rate. Each ETF has its strengths and weaknesses, and the right one for you depends on your risk tolerance, investment goals, and desire for excitement. Remember, in the world of ETFs, diversity isn't just the spice of life, it's the secret sauce.